Good morning. I'm Eric Jacobson, Business Growth Specialist with iConnection, and I'm the founder of Manufacturer Insights. I'm excited today to have Chris Broomhead, who is the Vice President and Relationship Manager at Citizens Bank. Chris has 14 years experience in banking with a focus on commercial cash management and financing. He focuses on manufacturing as a primary vertical, as well as transportation, distribution, and real estate. Chris has an MBA in finance from Thomas Edison State University. He lives in Media, Pennsylvania, just outside of Philadelphia, with his wife Lauren and his 5-year-old daughter Sailor. Welcome, Chris.
Thanks, Eric. Glad to be here.
So I asked Chris here today to talk about how manufacturers can manage their financial assets for more effective business growth. So Chris, when manufacturers experience higher supply, insurance, and benefits costs, they have more capital tied up in inventory, supplies, and work-in-progress goods. This increased working capital requirement can strain their financial resources, especially for businesses without substantial cash reserves. In what ways do you help a manufacturing business have more capital on hand?
Yeah, great points, Eric. Definitely all trends in the industry today. I think that, first of all, to take a step back, what I want to do when I'm working with a company is understand their business. So try to understand their pain points, try to be a problem solver for them, understand what their growth potential is or what their succession plans are. So I think it's a key first initiative. At the end of the day, banks can do a lot of the same things. So it's how do you separate yourself and how do you bring more value than just banking products to the table? So that's really what I wanted to focus on, is speaking to being entrenched in the industry and how to help these businesses truly succeed and grow. So to your point on what we can do to help them have more capital on hand, we can create efficiencies within their cash flow cycles. So that being their accounts receivable and their accounts payable. So if we can speed up accounts receivable and slow down accounts payable, there's more cash on hand. Additionally, financing, having lines of credit, having additional liquidity and capital on hand is a great strategy to be able to continue growth of the business. So I would start with the first thing is we want to make sure the company is creating efficiencies with their cash flow. Take all of your accounts payable coming in and analyze which ones have the potential to be sped up or have the potential to create efficiencies. So we can go through that list with them and help them where we see opportunities. So after that, we would go on to financing. So if we are looking to put a new line of credit in place, that would help them in many ways. But the few ways that I wanted to bring up were that can really create a backstop for growth. So if payroll is increasing, bringing on new employees, putting in additional hours, that gives the business the confidence to grow that payroll instead of limit it or even have cuts. It also allows for acquisitions, for additional inventory purchases, and with inventory purchases come opportunity buys. So if a product or a material is on sale, there's an opportunity buy, the vendor wants to move it, you have additional capital on hand to seize that opportunity instead of watch it pass by.
So Chris, those are great points. What is a benchmark that a manufacturer should use as far as the amount of capital to have on hand?
Yeah, so that's a great question, Eric. I think it's going to depend on the business, but a hard and fast rule is about 10% of revenue. That's what I go off of. So for example, if the business is doing $1 million in revenue, they're going to want $100,000 working capital. And same thing, if that's 5 million, you're up to 500,000 working capital. So that could be a mix of true cash on hand and a line of credit. So you want to that's the cushion that I look for and I suggest in a business.
You just mentioned a line of credit. So walk me through the process. What's involved with obtaining a business line of credit for a manufacturer?
Yeah, in banking, there's different metrics we're going to look at, and there's the different rules of credit. A lot of people talk about the five C's. I'm going to touch on the top two for me. So I think ultimately it's going to be based on the cash flow of the business. So is this business profitable? Is this business turning enough positive cash flow to be able to support the interest cost of a line of credit? So that's rule number one, the profitability and the true cash flow after all expenses and whatnot. That's pretty straightforward. The second part is collateral. So the bank's going to want to be collateralized for any loan it makes. Just like if you're going to buy a house and get a mortgage, the bank has a lien on that house. Same thing here, a line of credit. Typically, a bank is going to put a blanket lien or a UCC lien on the business, which will cover receivables of the business. And so typically, when we're looking at collateral, we want to do 80% of eligible receivables in the business. So if a company has, again, just to use round numbers, if a company has 5 million in accounts receivable, we would look to size the line at 4 million, 80% of that. And there will be some ineligibles. There will be some contra accounts. We don't like to include aged inventory, anything typically over 120 days. So it has to be eligible receivables, a little disclaimer there. But typically, again, that's the hard and fast rule, 80% of accounts receivable.
Chris, you mentioned the five C's. What are those five C's? I think I know a few of them. Cash is
Yeah, so it takes me back to early on credit training. But additionally, in addition to the collateral and the cash flow, there's also character. So the owner of this business and the standards and practices of the business, we want to make sure we're aligned with and everything's on the up and up. Capacity. So do they have the capacity to take on the debt with any other debt they have? So we'll collect the debt schedule, put it all together, and make sure they can handle everything. And then conditions, which is another good thing for us to talk about, Eric. So there's always going to be conditions of the loan, how they're going to how they're going to repay the loan. So that could be a schedule, an amortization schedule, and any requirements they have. Do they have to send financials in annually, quarterly? Do they need to send in accounts receivable monthly, quarterly? Is there any inventory check-ins, audits, anything like that? So that would round it out. So character, capacity, cash flow, collateral, and conditions.
Chris, you mentioned a UCC lien. Can you explain what that is?
Uniform commercial code.
Okay.
Yeah, so it's really pretty simple, actually. It's like I mentioned, it's just like a mortgage on your house is the quickest analogy. So it's a lien against the business, against all assets of the business. So if the bank was not made whole on the loan, if the company wasn't able to make payments, it could come after the assets of the company.
Staying with line of credit. So what happens if a business, say, is new or less than 2 years in business as far as qualifying for a line of credit?
Yeah, that's always a tough question, and it certainly will be harder. I want to give transparency. The more infancy stage of the business, it is harder to obtain credit. So at Citizens, I can speak for us. We have a streamlined product for smaller and not as mature, I would say, companies. So it would be based off of, instead of your year-end tax returns, your reviewed financial statements, it's actually just based off of your bank account and the owner's personal credit. So a little simpler process. It would cap out at $250,000. So again, for less mature, smaller, more recent startup type companies. After that, there is alternative lending, which I think can be extremely beneficial to companies that are just getting started, who are maybe not bankable yet, as we like to say. And these could be hard money lenders or bridge loans, some of these non-streamlined type banks. There is alternatives out there. They will be a higher cost of capital compared to a bank. They may have some additional requirements and restrictions in there to keep it tight and hopefully avoid any losses or anything like that. But that is an option that's out there, and I can refer out to them and they'll refer back to us as well. Banks and alternative lenders can work hand in hand.
So once that line of credit is in place, what are some of the requirements or restrictions that come along with that?
Yeah, that's important to think of for a company, and I alluded to this back to the 5 C's questions. There will be covenants in place, so we'll test annually. Typically, it's annually, it could be even more frequently. We'll test that cash flow to make sure the business is healthy, make sure that the cash flow is healthy, that it's still supporting on an ongoing basis. And the other item that I alluded to was we call it a borrowing base certificate. So in order to borrow on the line, that 80% I mentioned, we want to make sure that whatever it is that's collateralizing it, whether it be your accounts receivable, whether it be inventory, it stays on par as well. So it is typically going to be quarterly, or it could be met at a threshold, a dollar limit. But at some point, businesses will have to submit a borrowing base certificate as the lines get larger in size and the exposure to the bank grows, that shows where the accounts receivable is, where the inventory is. It could be monthly, it could be quarterly, it could be annually, but there will be check-ins on that as well to make sure the bank is collateralized.
So, Chris, what are some of the other ways that a commercial bank can help support manufacturers in financing?
Yeah, so we talked a lot about liquidity, specifically lines of credit and helping the cash flow cycle. But other ways that I think are really important, especially in today's day and age, is international payments. So if a business is doing payments internationally to, especially in other currencies, there's a real opportunity for a bank to come in and offer savings both on exchange rates and wire fees. So I'll try to give an example. So if a company is sending a vendor a payment in, I'm going to say Europe, using a euro as an example. So if they're sending it in US dollars, that person on the other side is taking on the interest rate risk. So they're doing the conversion of US dollars to euro on their end, and they're probably charging the company for that. So if you can go to your bank and also get a dual invoice and go to your bank and say, here's what it would cost if we send US dollars, here's what it would cost if we send euros, they can do the analysis and see if there's savings to send it in euros and you be the one to take on the interest rate risk and do the conversion up front. And I would say 8 times out of 10, we find savings because typically the vendor on the other side is going to mark it up to do that conversion for you. So we often find savings there. And then once there's a certain volume of payments, there's a threshold at the bank where we'll start discounting wire fees or even waiving wire fees, which could be $35 each. So if you're doing a few hundred a year, that really adds up.
So, in today's environment, there's the market's moving constantly, the production landscape is moving. How do you help manufacturers in this kind of volatile market?
Yes, another way with these foreign exchange payments is you just mentioned everything changes so quickly. So if someone is going to pay you for your product and they're giving terms, say 90, even some people 120 days, as much as manufacturers may not like it, it's out there. These exchange rates could change so much over that period of 3 or 4 months. So you can also put hedges in place with our international payments desk and our foreign exchange specialist so that you know that there's no risk of the price changing. I was going to pay $50,000, but due to exchange rates moving, now I have to pay 60,000. You'll know up front, you're locking in up front if you hedge against international markets. So I think that's really important if the volumes are at a higher level.
So in addition to volatile markets, there's competitions constantly changing, but probably more importantly, technology is changing so rapidly. I think everybody sees that both in their work and personal lives. So what's that importance and how does that relate to banking?
Yeah, so another great way that a bank can help as far as actual product is equipment financing. To deal with these technology changes, especially today, we can't have a discussion without talking about AI. So a lot of these machines are now starting to operate on their own or without so much manual supervision. You press a button and it's pre-programmed and it can run overnight while no one's there. People are constantly upgrading their machinery and equipment, and that can be capital intensive. And these pieces of machinery can cost millions of dollars. So equipment finance is another good piece. If leasing is not an option, equipment finance is a really good option that Citizens and most banks can offer. So that's been a big piece for me recently and especially with interest rates, people were waiting to see if interest rates would come down. But the fact of the matter is, in manufacturing, you can only wait so long before you start to fall behind and become less competitive against the competition that is upgrading their equipment and machinery.
So we talk about technology. You've got manufacturers of manufacturing 4.0, AI, software changes, IT resource needs. So how do you stay in tune with what is happening within the manufacturing industry?
Yeah, that's really important for me because back to one of my initial points, how do you separate yourself from the competition as a banker? And it's really knowing the businesses, but also knowing the industries. So the best way for me is client conversation. So my job as a relationship manager is to manage these relationships. So I'm constantly talking to the owners of businesses that bank with us today as well as many others out there that we're looking to do business with. I'm always talking to companies about what trends they see in their business, what their concerns are, and also what their successes are, how they're overcoming obstacles to still succeed today. So that's the best way is true human one-to-one conversation and real life examples. But also the bank does encourage us to participate in associations, trade shows, things like that. The one that's been really beneficial to me here in the Philadelphia region is Delaware Valley Industrial Resource Center. We call it DVIRC. So they are an association here in the region that focuses on manufacturing and brings together manufacturing, but also all the adjacent industries to help them as resources and pair them up. So it's really good to hear trends and also meet new people in the industry.
I seem to remember, didn't you say you have something like over seven manufacturing clients?
Yeah, so that's a great point. Always good to quantify. I do have over seven today in the portfolio and always looking to add more.
So, Chris, if I'm a manufacturer and for whatever reason now I want to start a new relationship with the bank, I'm out looking, want to have a relationship with the bank and someone like yourself. What are some of the things that I should be considering before I enter into that kind of relationship?
Yeah, definitely. So I think some of the things that I spoke about already are you want to understand if that individual and that team that's going to manage you understands the industry. I think it's very important if there's any seasonality or any nuances to the business that they're able to understand and comprehend that. And then and in addition to knowing the industry, the other thing is I would have a conversation with them, see who they work with in the industry, see if they have success stories they're willing to share with you, and talk about deals and talk about experiences they've had with other manufacturers and their businesses. So those are the specific items, a little bit more general. The thing that I like to harp on and really try to show newer clients is that at Citizens, at least, we have really good local leadership And I think that's important that leadership understand the business as well, understand the ownership of the business and where it's going, so they can be an advocate for you and the business at the bank. So you don't just have me that you work with as your relationship manager, but you have a full team, including senior executive leadership that understands the business and will advocate for you. And then really what could be most important is what level of service are you going to get? So you get someone like myself, a relationship manager, who can be the quarterback and delegate when you have different needs. But a true customer service, am I dialing a 1-800 number and getting a call center? Or am I reaching a human? What's the turnaround time if I need something kind of urgently? Is it going to take a day or two for someone to get back to me? Or is it going to take a few minutes? So from a service level, I think that's really important. That's where a lot of the frustrations come from when working with a bank or a lot of vendors. So if you can get a good feel for that up front, how the processes work, who the whole team is, that would be something I want to know.
I think that point you made about the leadership is very important. I know manufacturers want to be servicing other manufacturers. Maybe they're supplying a part that gets used in some other manufacturing process. Having leadership that's able to make those kinds of introductions between manufacturers is a really important differentiator.
Yeah, that's great. And the other thing that comes to mind, Eric, and this includes you, so it's great. I think it's good if you have someone, we met through a networking group, right? I think it's really good if your relationship manager or your account manager at whatever the vendor is, bank, wherever, can share their network. So if you need to upgrade your accountant, or if you're looking to buy real estate and you need a real estate specific attorney that you didn't have before, if you need HR, if you need marketing, someone with all of these connections is also really useful.
Yeah, I know a guy for marketing.
There you go.
Chris, I really want to thank you for coming on today. What we'll do is people can go to the Manufacturer Insights website and get your information if they'd like to reach out to you. Again, thank you for joining us today.
Yeah, this has been great. Thank you so much for having me on, and I hope everyone enjoys.